Welcome to Momentum Monday.
Hi, Ben.
What's going on, Howard?
What's going on? Let's get right to it. Welcome everybody. I'm in New York. Hopefully the echo isn't too bad. I'm in Stockputs headquarters. See everybody working out there. I think you can see everybody. And just catching up with the team on some new products. Ivan, how's the weather in San Diego?
It's a little gloomy, but other than that, the temperature is perfect. It's about 8.
It's 80 degrees here in New York, baby. So it's beautiful.
Oh, it's summer. Okay, good.
Spring. That's fall. It's the best time to be in New York. All right, let's get right to the action. Get to the averages.
All right, just a second. Let me share my screen. All right, as you can see, the Russell 2000.
We're going to start with small caps, right, which are kind of relative strength-wise as big caps, and I mean they're rolling over a little bit here. Would you not say that, Ivan? Or we're in a
definitely today. They had a slight gap up right near their 50-day moving average, where sellers just slammed them down, and they finished the day down almost 1.5%, which, if you compare to large caps, especially large cap tech stocks, which are near all-time highs, I mean, we're seeing a tremendous divergence, and we're even seeing that in market internals. If you look under the hood, you can see that in the past week and a half, we saw a huge increase of stocks trading below their 50-day moving average. I mean, it went from something from 55% to about 40% just in the past week and a half. And this is why
let's tell people, give you a couple examples of stocks were crushing it on the small cap side. Let's pull up a few that are in this index. First of all, Ivan's talking about the small caps here. We could see, like, I'll take a look at HEAR, for example, Ivan, which was just a hot play on gaming, right? And the stock, went from like nothing to 30, and now it's back, below 20. So there's been, obviously, in the scope of things, huge runs, but you can see small caps are giving back big chunks of gains from August and July. And so, it takes a while for sometimes these things to unwind, and now we're starting to see some of these small caps unwind. I think another one was FNKO, which is a marketplace for collectibles. Incredible run from 9 to 30, and now back, down 30% to 20. So that's small cap for you. What else in small cap has been hurting? Is it the financials, Ivan?
Financials definitely have been very weak. You can see that pretty significant sell-off in the past week. I mean, people say that financials are supposed to outperform in a rising environment.
Yeah, right? You cannot be in financials right here. This is like, we talked about it last week, the disruption, the new members of the fintech mafia, the FANG of fintech, I think people are starting to call it. The PayPals, the Squares. They're living off the Amazon. They're living off the railroads of their end, the Visas and the Mastercard, the railroads of their generation. But they are making their money in a much leaner employee basis, right? So it's not like they're printing money themselves, these new lenders and these new service providers in fintech, but they're eating into the fat cat banks, right?
Yes.
And as interest rate rise and these fintech companies start expanding their product base to get into lending and all these things, I think what Wells Fargo and all these bigger banks and some of these regional banks are going to realize, they kind of are struggling. This looks like a shortable. Again, I don't short stocks, but the financials look shortable here. That it does not bode well for the market in general.
They're near their 50.
They look shortable. I didn't say I would short them. I just think, the relative strength you can see here is plummeting. What about XLF?
It looks similar, but what I wanted to add, that another reason why financials are underperforming is that long-term interest rates are just rising much slower than short-term interest rates, and the spread between them has been substantially reduced, and the spread is where banks' margin comes from. So there is a very
so you can't do that carry trade anymore.
There is a very rational reason why financials are underperforming.
Okay, so that's the true fundamental or reason right now is long-term rates. The spread's narrowing, you're saying?
Oh, yes. But other than that, we continue to see strength in select spots in the market. Definitely, market strength has been dwindling. The market has been is carried by fewer and fewer stocks, but there is definitely some strength left. You can see Nvidia breaking out to new all-time highs. It's a big company. It's almost
meets gaming, meets AI, meets automation. I mean, it is an index for the future. I think it's kind of like become like Google. It's like an ETF, Nvidia, because they're across so many platforms. I mean, it's a true. I mean, it's embarrassing that I don't own it, but it is a true. It is part of every major trend underway. So it's helping the semiconductors, obviously.
Yeah. So Nvidia, AMD, they have another amazing year as well, and apparently after that huge 50%, more than 50% move in the summer, they're due for some consolidation.
But it's doing well. It's just holding the $30 marker.
Yeah.
And this is one of the young kids. These are two stocks the young kids have liked. Netflix basing well.
Yeah, Netflix showing tremendous relative strength. Today we saw some news how they want to individualize some of their shows. They want to let people.
Great, but then you could create your own Black Mirror. I saw that. That was cool. Okay, let's go through the SL50. Let's go through what's new and what's tired and what's working. So this is Ivan and I have a marketwisdom.com. Ivan keeps this updated daily. This is a service that Ivan provides, $90 a month. Becoming your mentor around trends and momentum. And this is something that Ivan and I have put together a proprietary list. We go through this every week to see kind of where the strength is and momentum and the best fundamentals, and we kind of cherry pick it down to about 50 stocks, assuming the market's good. Right now, there are 50 names on here, Ivan.
Yeah, there are 50 days. There are 50 names.
Watched our show. Most of these stocks we've talked about. We're always looking for new entries into this list. You can see if we start at the top, Ivan and I started talking about Align a few weeks ago, but it's been a company. Most of these stocks have been here for a while. We can see there's some new entries.
Yeah. There. Let's take a look at the line real quick. It continues to consolidate through time.
It's a great combination of like technology, retail, and people caring about their teeth. Meaning, you can go in, bing bang boom, get your teeth fixed while you're at the mall, cleaned up and aligned and whitened. And this has just been an ongoing trend that I didn't even notice for about 300 points. But as malls get repurposed, these are the type of brands that are going to be in these malls where you go to the mall. If you're going to go to the mall, you want to get shit done. You don't want to just buy shit. You may want to watch a movie, get food, and handle shit that you just don't have time to during the week. And that could be medical. That could be, just new things. That's kind of what retail is going to be driven by. And then Wix is just build your own website.
Yeah, I mean, what I was going to say that, of course, the weakness in the small caps is going to impact the SL50 list, which consists of quite a few small caps. And in the past couple weeks, I've seen an increase in failed breakouts. And this is why last Monday, when you asked me if I'm bullish or bearish, I told you that I'm very careful in the current market environment. I don't see the same setups. I've been seeing many failed breakouts, which just makes me very cautious, and that's why I'm keeping a relatively large cash position.
Mm-hmm.
The current market.
And today, and more of the same today, right? We had a big gap up on the NASDAQ.
Today, quite a few failed breakouts. For example, this one, Alarm Holdings. It tried to break out, but the weakness in the overall market.
It's had great runs. If we go look at a weekly and a monthly and Alarm, because it's been on the list for a while, this is a breakout after a lot of breakouts.
Yes.
Yeah. These stocks can go sideways for 2 years and still be an uptrend. So we just, That's what I think Ivan's talking about. It's not like, you just have to sometimes, retreat within a bull market because the ideas aren't working. But you can see a lot of these have been here. What's new? G3 Apparel Group. I don't know.
Yeah, G3, that's their second week. And as you can see, they're not really doing that well. They're down a little bit. Let's see if we have any other new.
So 47 weeks. This is the great thing about our list is it really keeps you in positions.
Yeah, so
some new ones. Chart Industries, Metal Fabricate. So a lot of the industrial stocks started breaking out.
I mean, today probably energy stocks are among the few that worked well on the long side, just because crude oil, Brent crude oil, is about to break 75, and we're starting to see some of the energy names try to break out. And there are quite a few of them. Like most of them are trying to break out to new 52-week highs. I'm not sure how sustainable that move is, but it just depends on where crude oil goes. 75, it's a major key level, and if it manages
that right now, is crude right at 75?
Yeah, it's right there. It's
like 4-year highs on crude. I mean, these are all things that got to affect the market at some point.
Of course, I mean that's why we saw that reversal in transportation.
But they're not vicious yet. The only vicious reversal is in the banks, and that just seems more, like you said, fundamental based on interest rates.
Yeah, I mean, from big picture perspective, yes, almost anything is in an uptrend, but everything depends on your time frame. I'm seeing even retailers are starting to roll over in a short-term perspective, of course.
Yeah, percentage-wise, these aren't huge moves, but even the breakouts are failing. So keep flipping through some of these. So when energy is looking good, I mean, the markets just don't excite me personally. So hopefully this passes, and hopefully interest rates kind of the spread widens again for the financials. But I'm just not good at predicting that. And so this is the 20-year Treasury. So what is this saying here? Is that interest rates just continue to creep up?
They're the reverse. They're the opposite of interest rates. So when they go down, interest rates go up. And you can see, I mean, they're on the brink of another breakdown.
So. Breakout. This is like years and years.
Yeah, this is a longer term chart.
Yeah. So small moves are huge moves for the regular market. So interest rates continue to creep higher here. We're not truly fundamental here at Momentum Monday, so we're just trying to find ideas. But these are things that weigh on stocks. Rising interest rates, poor spreads for the banks, higher energy costs, combined with being long. It's been a booming bull market. I think you got to be a little more selective. I think it's interesting that Netflix, so entertainment, media, select semiconductors. If we were to look at, Apple's right there. Again, I think you call them Fashology, Lulu. The cast of characters that we continue to talk about. Lulu, all-time highs. Nike, pretty much at all-time highs. Small reversals here. So I think as we move, Ivan, what I'm seeing here is, and Disney still looks really good. Did give back some today. It gave back a little bit today, but it is right there, wanting to go higher. If we looked at, so for a lot of industrial companies, if we look at Boeing, I think that's had a cool.
Oh yeah, Boeing had a tremendous breakout out of a very long base today.
Zoom in there on the daily, maybe. I mean, it's hard not to own Boeing. I mean, I just don't know anything about the company, but obviously the thesis is, what's good for American economy is good for Boeing. I think that the lie is what's good for the American economy is good for banks. It may be good for their balance sheets and their profits, but it hasn't been good for their stocks. It seems to be good for the industrials. So Boeing, where's 3M?
Lagging.
Not the same thing. So it looks like Boeing is a winner. So it's select winners continue to work. And I work backwards on the winners going, listen, Netflix and Amazon and Apple have so much room for growth in a new structured world, especially as malls get reimagined, as media and entertainment get reimagined. And I'm using the new Apple phone, and I love it. It's not any different than the last phone, but I think I'm in that luxury category of users that will pay every year for a new phone. It lives in my hand. It's a cost of doing business. It's a small cost of doing business. So with Apple, I think what we're seeing is it's not a new product. I love the new big form factor because I live on my mobile phone. So I like the iPhone X in a bigger format. It makes easier on the eyes as an aging population. Listen, you can make a lot. The margins on selling to the higher net worth people is just a lot better. So as we can see here, as Ivan flips through, you got to know where we are in the scheme of things. And Apple, these bigger companies that have a global footprint, it's really hard to knock them off their game. What about the China? Any bounce in the Chinese stocks, Ivan?
Yes, some of them have recovered, but they're still troublesome. Let's use that word. You can see Tencent, which is probably one of the strongest companies in China in stocks. They're still
full disclosure. I've owned it for a long time.
They're 50 and below their 200-day moving average.
It's not a stock unless you really believe. I consider Tencent, like I said, it's like my venture capital foray into China. And I expect there to be 30-40% swings, but I've owned it since the 20s, and I buy it on 30% dips. So, at the risk of Tencent being on its way to the low 30s, that's the risk I take. But
quite a few of the big Chinese stocks are not looking especially healthy.
No, they look terrible. But they also have borne the full brunt of their own government and, America's anti-China kind of sentiment from a political level. So all in all, considering, the runs and the risks that these companies have taken politically lately, as long as they continue to execute, if the companies themselves have problems, these companies like with JD are obviously going to have problems. But when these stocks are down 40-50%, if they're interesting, a lot of the bigger brands.
Yeah, probably the only Chinese stocks that currently interest me is Billy, but they need to close above 15.
Yeah.
Before 15, I wouldn't touch them. But they're showing some relative strength for the sector. But even the Chinese Tinder is having issues price-wise.
All right. So to wrap up, I think the key is to watch financials here and select strength. I think we walked through the strength. I think NVIDIA is a key tell. I think you have Disney, Netflix. You keep an eye on these leaders and see if they hold them. And if where's your, I asked you last week, short term, are you looking for fresh ideas, Ivan, or are you just being even more?
I'm looking for ideas every single day, but I continue to be cautious and keep a large cash position.
Okay. Easy to find Ivan on StockTwits and obviously Market Wisdom and easy to find me. Thanks, Market Smith. These charts are fantastic.
Yes, thank you guys. And real quick before we go, I just wanted to mention that last week.
Yeah, Ivan, your book, how's it doing?
Doing really well. I received really good feedback from people that read it. So it's called Swing Trading with Options.
You're basically taking your swing trading model and applying for people with smaller accounts that want to really go for it and apply options.
Yeah. So it's an interesting theme. I hope it's useful. So far, the feedback has been great. So if you're interested, just check it out on Amazon. And
do I share in any of these profits or no? Am I part of this? Why am I allowing you to promote stuff on my time?
I'll buy a cup of coffee, Howard.
Okay, you just keep making all the money and I just keep working hard. I don't understand this part of it. Okay, I will. We'll see everybody here next week. I think from Ivan and I, we say, listen, there's no rush to chase new ideas here, but at the same time, there's no reason to short-term panic. We'll probably have a lot more information next week. If things just start selling off a little harder, we'll have to start looking at trimming some stuff and selectively focused on where the strength could be But again, this could just be a pause that refreshes for a lot of the markets. October is generally a strong month, and what I've been reading statistically is in this type of midterm thing where both sides are promising things, October tends to be one of the strongest months of the year. But again, that's just one data point.
Mm-hmm.
All right.
All right. See you next time.
Okay.